the latest unemployment data has just dropped, and perhaps give us a few more clues as to the direction of the economy, the budget, but importantly interest rates. Business editor Ross Greenwood is with me. What's the number, Ross?
Well, it's lower than forecast. It's steady at 4.1%. So this whole issue about very strong jobs market in Australia does continue. And that, of course, is suggested to put pressure on wages. You certainly saw that in public sector wages yesterday. So this is the number that has just dropped in the last few seconds. The unemployment rate for January, 4.1%. Market forecast set it at 4.2%. So in other words, just nudging up, not terribly much. But as a result, it's coming much stronger, or at least stronger than anticipated. Now, the interesting thing about this, Kieran, is just what impact this might have into the future. We're going to have a quick look, and you can see there that the unemployment rate has not really taken off. When it got out to 4.3% late last year, you sort of thought that is the thing that was really taking pressure off interest rates at that stage. But now it's come back and continues to be very, very strong. That shows, A, that there's a demand for labour in our workforce. And then the second factor about this is that means that there's going to be ongoing pressure on the Reserve Bank to continue to raise interest rates. Just a few little headlines for you. Full-time employment in January increased by 50,500 people. Part-time employment fell by 32,000, so a net sort of 18,000 jobs, give or take. The second thing is the participation rate, and in particular, this is more and more women going to the workforce, which is a healthy thing for any economy, sitting there at about 2/3 of those who are wanting to work. And then the other thing as well, the underemployment rate has fallen to 5.9%.
And so in terms of the RBA, it's due to make its next decision in a little over 3 weeks. How does this data feed into that?
I just think it makes it a bit harder for them, really. We'll have a little bit of a look at one thing for you. I think we should be starting to see some of the numbers which suggest just how likely it is that the Reserve Bank will move interest rates. This is the more detailed data. The number of people employed, as I said, about 18,000 more jobs. The number of unemployed fell during that time, and the monthly hours worked up by 11 million jobs. Now, this is all good that people are working, but before this number dropped just only literally 2 minutes ago, the odds of an increase in rates in 3 weeks' time was 18%. It's still 18%. So the markets appear to be taking this pretty much in their stride as we see. So, as I say, the strong labour market is actually good for the economy. The second thing is that we have also next week the inflation numbers that come out, which will all really determine where the Reserve Bank goes. And you can see that the monthly inflation rate being at a headline of 3.8%. That's the key to this right now, because it was that really triggered the Reserve Bank to move this month. And so from that point of view, it's just a matter of where do they go next, I guess, in terms of interest rates. Markets right now suggesting the next increase in interest rates is probably the middle of this year. Let's have a look at the markets, and you can see here the immediate effect on the markets of these latest unemployment rates. As I say, steady at 4. In fact, they've revised down the previous one. I'm just noticing here from 4.2 to 4.1%. So they're saying the unemployment rate is steady. In actual fact, the reported figure was 4.2%. They've now revised that. You can see here a spike in the Aussie dollar. It had been actually falling off during the course of today. And so you can see, one, there's been basically a little bit of a fall off in the bond rates. And now there's also this increase in the Australian dollar. Here's the stock market. It was already very, very strong. Banks in particular, incredibly strong today, off strong results from NAB yesterday. But again, this Australian, the ASX continues on towards these all-time record highs, driven by BHP, driven by the banks, and driven by what you'd have to say is a pretty strong economy from these employment numbers just out.
Yeah, that's it. That's that resilient labour market, that's for sure. Before we go, Ross, quickly, I've got to go to Bridget McKenzie in a moment, but I want to get your thoughts on this row between Philip Lowe and the Treasurer. Interesting comments, really. Like the former Governor Lowe says, productivity problem, government spending too much. Jim Chalmers has had a whack back saying he wanted to be reappointed, he wasn't, and has become a persistent critic.
So here's my point. He hasn't been a persistent critic. That's to my mind, just not right. He hasn't been continuously in the papers. In fact, he's been really very, in my opinion, proper as a former Reserve Bank governor to be very careful in his comments about our economy and about interest rates since he's been out of that job. Now, the reality is he's taken on the new job at the ASX. He's made these comments, and the comments reflect pretty much what a lot of people, including the Reserve Bank itself, has said. Here are the comments that he said. Productivity capacity of the economy is not growing very quickly. That, Kieran, is absolutely right. We know that. The government wants to keep spending. We know that's true, and wants to keep offering people handouts, which adds to demand, which in the normal course of events would be fine. But if the supply is not growing, you can't do it. And if you try to do it, then interest rates have to go up. So let's go to that. So that's what he has said. Then yesterday, when Jim Chalmers was asked about this, when he was responding to the wage price growth data that was out, came out and gave him a whack. Just have a listen to this.
I think it's a matter of public record. Phil Lowe would have liked to have been reappointed by the government. After he wasn't reappointed by the government, he's become a fairly persistent critic of the Labor government in the pages of the Financial Review and elsewhere. I think to some extent that's just human nature. I understand that. But I have a very respectful view of Phil Lowe.
And to my sense, that is the Treasurer deflecting what is a serious criticism of the government, and it's one which the government is highly sensitive to at a time when you've got strong employment but the prospect of even higher interest rates this year.
Ross Greenwood, thanks.